So how many of you out there actually depend and bet your money when you are leveraging your capital within the market based on what an indicator is doing? If you are a day trader doing so, you are not going to be consistent, all right? That's why I don't heavily or believe in trading with indicators now, other than one that I use, but I don't allow it to tell me when to trade or how to trade, okay? Based on signals. That's the problem with a lot of traders today, I find, is that they are relying 100% most times on what I call green light or red light, green light trading. We'll call it that, okay? That means that every time they see a signal flash, red, green, blue, pink, whatever it may be, they are jumping into or out of trades. Okay? So, what they do is that they simply wait for an indicator to give them a signal to buy or to sell. Okay? Now, you have certain types of indicators like your ATRs, your RSIs, your MACDs, stochastics, and a number or slew of other trading indicators that are part of most trading platforms out there. All right. So here in NinjaTrader, say for instance, because this is the platform that I use because I trade the future markets. Okay. So if I go to my indicator list here, okay, I click on here, okay, you have a rundown of tons of different indicators that you can actually use to add to your charts that most people think will give them an edge, okay, or within the markets, basically letting them know or giving them a signal when to buy, all right, or when to sell, okay. So a lot of people, what they do is when the market is actually trending, all right, they're looking for a signal off of whatever indicator it may be to actually buy, because you have relative strength indicators, you have momentum based indicators. So when they see the market pushing higher, okay, they're chasing, all right. That's one of the biggest problems that most traders end up having is that they fail to wait for opportunities and look for setups, but they tend to turn to indicators and allow those type things to really be the driving force to jumping in the market or entering trades and then taking out. Okay, you cannot do that because indicators simply do one thing, and that is they lag behind the pure data that is being fed to our charts. Okay, whatever the market is doing, meaning price action. Okay, so by the time I'm gonna say this, by the time a move has happened, or you have missed either the move or got into the trade halfway through the trade. As day traders, we have to do one thing. We have to be sharp. We have to be keen. We have to know when to get in a position and when to close that position. So it's all about probabilities first and foremost, but it's really about having a solid strategy that allows us to get into the market at opportune times, okay? So we have to be able to do, like I say always, two things: understand market structure and read price action, okay? I said this so many times before that when I first started trading, I was like most traders out there. I was adding the RSIs, the MACDs, the stochastics, and all those other lists of indicators that those platforms offer you to my charts. I tested them probably about all of them, okay? Now, I'm sure there's some newer ones out there that I probably haven't, but all the main indicators I have actually tried at some point, okay? And that was during my first 2 years when I was struggling trying to trade. All right. Yeah, I was online like most people, especially if you're a new trader or a beginner trader watching this video today. All right. Maybe this will help you. I'm telling you right now, I'm just going to give you a straight tip, a straight hint. Okay. Something I learned along the way. All right. And it became clear and evident. I'm not going to tell you what to do or how to trade, but if you try this, okay, maybe you're struggling with learning or understanding market structure. Market structure is the key, okay? It is the holy grail to trading, okay? I will say that, all right? Because you have to be able to master it if you want to be able to succeed in this market. Because without it, you're not going to have an understanding of what the market is trying to accomplish, all right, overall, from a macro and a micro standpoint. So please do yourself a favor. learn, grasp, understand, allow it to soak in. Market structure. It is the key component to trading. All right. Now, let me give you this tip or hint I was talking about. Indicators for me became a no-go probably about my second year into trading. I'm not saying they can't slightly help you out. Basically, in the end of things, after the move or the trade has actually happened or taken place, the setups actually happen, you're too late. Okay, so by the time the indicator, say the RSI, okay, which is like a relative strength indicator, all right, or some momentum-based indicator, is showing you or telling you that it's jumped over a certain level, say 0 or whatever level that they may be coupled or built in within that indicator. You can see they have grids on there. They'll have numbers. They'll have a scale. And everybody maybe using indicators to in some way or another, whatever the case is, when it comes to those scales, to knowing waiting for a certain indicator to jump above or below a certain level. So the thing about it is that by the time that indicator has pointed up or pointed down, whether you're going long or short, you missed the move, okay? Because they lag behind price, all right? So the tip or hint that I want to give, I know I said this for the third time, is go back to trade with naked charts. What do I mean? Take everything off your charts, all right? Do yourself that favor, okay? Especially if you're someone that's struggling with understanding market structure and you have what I like to call blindsided traders out there. And basically what they're looking for is to chase the market and allow those indicators to tell them when to get in and when to get out, okay? You're missing opportunities each time you do that because you're missing the bigger move by getting into it at the point of when it actually happened or occurred or originated. That's why I do not heavily depend on indicators. The only indicator which I'm going to talk about today that I use in my trading is volume profile, okay? Why? Because everyone who is a successful trader knows that volume is extremely important within the markets. Without volume, there is no market movement, okay? All right? And even if there's low volume, guess what? And we as traders, we have to be very selective as to how we trade and where we trade, all right, within the markets, okay? And some days you may not take any trades at all. So volume lets me know areas historically or present day, meaning as the market is in the current session. It lets me know where orders are being placed at, in a sense, where most of the transaction or most of the orders were being filled throughout the day, because the market tends to like to come back to those areas. It's a saving place. It's a safe place for the market to return to because it just feels comfortable there, It's just like coming home every single day from work, whatever the case is. It's your safe haven, okay? So that's what I like to, I like to use the volume profile. It's important to me because I like to see areas that I use the volume profile coupled into my strategy, because I always talk about this in videos, buying the lows and selling the highs, meaning you want to buy at a discounted price and sell at a premium, okay? So I'm going to show you just not really the strategy. Well, what I'll do is I'll show you an example of a trade that I took yesterday, okay? And we'll look at the volume profile in relation to the setup itself, meaning the zone or the area. Yes, I trade supply and demand, all right? Because I want to see, I always talk about buying right below a high volume area or selling right above a high volume area, okay? But still, it's all surrounding the idea that volume is important. We want to trade around volume, okay? All right? So we wait for areas of price get below the volume profile to buy at a discounted price and sell at a premium. So let's talk about it. I'm going to show you right now. Now here's a volume profile that I use. That's to the right hand side of my chart. NinjaTrader has their order flow package, I believe, and built within that they have a volume profile tool as well. And below I have this histogram of up and down movement of volume as well. But this is the volume profile that I'm really talking about right here. As you can see, you have peaks and valleys. So you basically have what's called high volume nodes and low volume nodes, HVNs or LVNs. So, but I'm not looking at that specifically first and foremost when I take my trades. I'm zoomed in, honed in on the actual market structure, what the structure of the market is doing, meaning market structure and price action, okay? But I just want to show you a quick reference of what I'm talking about. Okay, so this area, this is off of 20. This is off of a 12 range chart, which is my entry chart. Okay, or the chart that I mostly execute my trades on. So this area right here, this is an area where demand came out of. Okay, meaning price pushed to the downside. So this was an area of demand. All right, so basically what I do is I like to, again, I trade supply and demand. So I was waiting for, I'm sorry, not demand, guys, supply. This is the area of supply. Sorry about that. Sorry about that. I was looking to sell at demand down here, say for instance, okay? When I'm making videos, sometimes it's kind of, not say difficult or hard, but it's just sometimes you get your words confused when you're trying to explain things because you're thinking a little quicker. But anyways, getting back to what I was saying, this is a supply zone. So what I was looking for, if you don't know much about supply and demand, please, watch a video too here on the channel. I have tons of videos, discussing or showing my means of how I trade and the strategy I use. So take the time to do so if you please want to. And or you can watch, from somewhere else, someone else's channel. It doesn't really matter when it comes to supply and demand. But I'm gonna tell you right now, most people do trade supply and demand differently. So this is how I trade supply and demand. And if you're interested, watch some of the videos here on this channel and become part of the community. Okay, so supply zone right here, price pushing away to the downside right here. So basically what I'll do is I'll wait for price to retrace back to that area, okay? And then I will scale down to a lower time frame chart. For me, my full range chart, to look for basically a break instruction in the opposite direction, pull back to a key area of supply off the full range, and then go short, okay, once I get the rejection. So what I'm trying to say is, to wrap it up in a nutshell, is to mark, in this case here, an area of supply off my higher time frame, slightly higher time frame, the 12 range. Once we retrace back to that, scale down to a lower time frame, and then look for a setup to happen, meaning a break of structure, pull back to key area supply on the lower time frame. Just to reiterate that, okay? Pretty simple strategy that I use. If you want to learn more about it, again, please take the time to go ahead and sub to the channel. You got to subscribe to the channel, guys. And also do me a favor, as well as make sure to click on the bell next to the subscribe button and turn all your post notifications on so you never miss one of the uploads here on the channel. That's the way you're going to get pushed and fed the videos when I, drop this content like this, okay? But what I want to show you is take a look at this area here when we did retrace back to the key area supply right here. Look at volume profile to the right. Remember what I said, if we're looking to sell at a supply area, this would be at a premium area where price is higher, okay? I'll wait for price to get above a high volume area. To the outer edge, this is a volume area right here. So, let's see if I can't, well, it's okay. I'm gonna try to do something. But anyways, this area right here, okay, is a high volume area. So, price pushed lower here, okay? So it pushed through an area of volume as that was created, all right, push lower, and then it returned back to it. Remember what I said? Price likes to return back to areas where it's comfortable with being, areas meaning where it feels like it's protected, high volume areas. You got to think about things like that when you're trading. So, but I don't trade in the midst or the thick of the high volume area. I want to trade when price gets to the outer edge of it, meaning where volume starts to thin out. Guess what's going to happen? Price is going to want to pull back to the medium or the mean. Look, when price thinned out, once it retraced back to this high volume, to this supply zone right here, okay? Right here, it thinned out, and then it returned back to the mean and lower. Look, see? As it moved away and rejected the supply zone, it pushed lower, meaning that it dropped down from the outer edge of the high volume area back down to the middle portion where most of the volume or traffic's being made at, and lower, okay? But the key to it really is to identify those zones, in this case here, where this was supply at, and in relation to the high volume, to the volume profile. So, and what you can also do too, which I like to do sometimes, is I like to do add what's called a micro profile or flexible profile at the area where there's supply at. You see how we have this high volume area right there that is this just drawn out on the chart here. Let me show it to you right here. See, price will trace back to it. We get to the outer edge of this high volume area. Okay, so everything kind of incorporates or couples together in a sense. We have so much means of confluence there. It's a supply area there. Price retraces back to it. You look for the rejection on the lower time frame, but we're at a high volume area, back where price where volume was being built at, and something happened there. Look what happened right here when price moved away. What did it do? Created this area of supply, and it pushed away from it, or moved away from it. So when price comes back to it, okay, and this is after price made this low here, and then broke structure back to the upside, okay, basically, and started making these higher highs and higher lows. So we started breaking structure to the upside. And we made this high point here, okay? All right, off this leg right here to the upside. So what happens when price moved away from it? It moved sideways, created volume here, creating an area of supply before it dropped lower. And when it did, we just wait for the retracement back to the area. Look to take it right at the outer edge of the high volume. Not immediately once price gets to it, but scale down to a lower time frame to get the rejection, okay? So I'm gonna scale down to my 4 range. I'm gonna show you this right quick, okay? So my 4 range chart, let's blow it up right here, and let me find that area again because I didn't mark it off. On my 12 range, this was at 1 o'clock yesterday afternoon. So let's bring that up. Must have been around this time right here. Squeeze it together. There we go. This is that area, that zone right there, okay? So if you look and see what happened here, once price got up to that area there, it rejected the zone, okay? Rejected it. But what I did on the 4 range was I looked to the left-hand side. Once price would trace it back to that, this is the zone right here at the 12 range. Got back to the area. So what I noticed here was that price was breaking structure to the downside. So even on the 4 range chart here, we got a structural break to the downside, a BOS. Price returns back to the area. We have a imbalance right here at this zone or area right here. So we'll mark this right quick. I'm just going to show you that now this will be a supply zone off the 4 range chart, say for instance, okay? All right, in this area right here, okay? Imbalance sitting right here. So price, give me 1 second. All right, let me redraw this zone right quick. There we go. That's the supply zone now off of the 4 range chart, okay? So once price retraces back to it, we already have a structure break to the downside, giving us a means of showing confirmation that price wants to reject the area. And even on the 4 range chart, you can see when price retraces back to it, here, if you look at the volume profile, we're at the outer edge of a high volume area. So even if I took my micro profile here, volume profile, and did this right here, look, what do you see there? High volume area right here, price moves back to it, rejects it. We have break of structure, an imbalance, look to go short, okay? And what I'm looking to do once it taps back into the zone and rejects it, and I go short, I'm looking to, I start to look below me to the left-hand side to see if there's areas where price needs to fill in at, meaning imbalances. And it does. It imbalances all the way, you know, coming down in some points, okay? And price is going to try to fill those areas in, all right? That's the goal of it, okay? It's left behind areas to where it needs to fill back in, all right? So I just wanted to kind of reiterate, you know, I just talk about indicators, why I don't, you know, place a lot of emphasis on them, and other than the volume profile, because to me, volume is extremely important, and it helps me. I use the volume profile in my trading as kind of like a GPS, as I just showed you, you know, gives me a relative area where the volume's at, as where, you know, once I'm where I see a setup taking place at, it lets me know, okay, there's volume here or right below it, right above it. So when I see, you know, nice, you know, peaks right here, okay, a mountain, a volume right here, and I'm looking to go short right above it, I'm gonna take it back down to the mean at least, you know. So it's just an opportunity that helps me, you know, kind of gives me a geographical land point in a sense to, you know, where I could possibly take my trades from, okay? So just an extra means of confirmation. So if you don't know much about the volume profile, I really recommend you kind of taking a look at it. The one I use is currently not available any longer because of sanctions that are going on overseas. But, you know, if you use an NinjaTrader, say for instance, they do, and you have a lifetime license, they do offer a beautiful order flow suite, which the volume profile I believe comes coupled or part of that package as well. As well as there's other, you know, volume profile. I'm sure third party indicator out there that you can purchase from some third party program or company or business, whatever the case is. But the one I use is from a company called discotrading.com. Again, it is currently not for sale, meaning that they're not processing any further orders right now at this moment because of the overseas sanctions. But hey, that's all I have for you guys. I appreciate everyone tuning in. This is just my little tidbits and reason why I do not like to use indicators other than the volume profile. Okay, I'm not saying that, you know, certain indicators may not kind of help you along, maybe help you stay in a trade once you're already into that trade. Okay, but you still got to understand that, you know, you should never let an indicator really just tell you when to get out, because maybe you should have already gotten out of the trade and the indicator really hasn't made its move to give you or gave you the signal to get out of the trade. Okay, so the same thing, you know, you're looking to get into a trade, and by the time the indicator gives you a signal, maybe you missed opportunity. So I'm just telling you, from me to you, my own personal experience in dealing with indicators. I like using the volume profile because, again, volume is important. All right. But look, if you're interested in joining our Discord, people always ask me how they can sign up. The link is down in the description portion of this video. Okay, so find the link down below. It says Discord with a highlighted blue link. Click on it, invite yourself in, and come join us today. All right, that's all I have for you guys today. I appreciate each and every one of you. Again, hit the subscribe button if you have not subbed to the channel. Click on the bell next to it. Turn on all your post notifications. And last but not least, please make sure to drop a like on the video. Thank you, and I'll see you guys in the next one.